JB here. Hope everyone's doing outstanding. Thursday, November 23, 33. On this Friday afternoon, really quick rant, talk about the market, some things I'm looking at go from there. S&P in the red, down 1%. A crazy session after yesterday's green day that put an end to a four-session losing streak. And all on the heels of NVIDIA's earnings. A crazy day, and you do this so long. There's days that you look at that have similarities to days you've had in the past. And I was doing a rant this morning. Just so many things I was looking at, uh, with the earnings and what's going on in regards to the just everything together. And I'm like, today is probably one of those days where you just have to be a little cautious. I put it on the watch list. I remember I was talking about Apple on the rant, right? Apple back in the day used to be the largest company by market cap, used to be by far, right? There wasn't a lot of companies. Google was close, Amazon was still, but it would have earnings that would move the market, right? And sometimes it would have these monster earnings, and then the market would reverse. And I'm not saying Nvidia is part of the sell off here today, but I'm sitting there in the morning watching, and I'm like, it's being a bear or buying puts is not a fun thing, right? I almost feel slimy sometimes. I hate to say it like that, buying puts, because yeah, I always use the analogy. It's not, you don't go to your neighborhood barbecue over the weekend and tell them you hope the market goes to crap, crashes, so you can make money on the short side. No, because everybody's got a vested interest in the market's going up, whether it's the real estate market, 401ks, pension funds, you name it, right? That's everybody, that's just how it works. So to bet that stuff goes down is just, it's not fun. But at the same time, you trade, right? And I'm here to make money on both sides. So even this morning, I wasn't sure that we were going to get a reversal here today. But the thing is, proper preparation prevents poor performance, right? Always want to be prepared, right? Luck is when preparation meets opportunity. Whatever little slogan or jargon there is, it's just important when you're trading. If you're just sitting, all got your bull suit on, bull horns blaring, ready to go, just load the calls. Today's the day you can get destroyed, right? So it's tough. So it's good to be prepared. I hate to, not to say hate to see it happen, but at least when it did happen, I was ready to pull the trigger. It just could have been a monster day if I had just been a little more aggressive. But how many times over the years you're aggressive and the market teaches you a lesson on the other side? So anyway, AMD is hitting lows today, but 10 bags everywhere. AMD, ASML. The disappointing thing is Broadcom, right? So this morning I'm watching, and markets are stubborn, and Broadcom's been stubborn all week, And not that I don't think Broadcom's a great company, okay, but it's been a great hedge vehicle. So I was watching Broadcom as a possible reversal this morning, and it's sitting there at 370. I get those 350 puts, and you would think, and you look at FinTwit and all the media pundits, everybody, oh wow, great earnings from NVIDIA. And it was great earnings, right? If you had crafted up an earnings report for the market to rally, that was it overnight. And then Walmart this morning, another notch in the bull case. Oh wow, great earnings, raised guidance. Then the jobs report comes out. Wow, another one, monster jobs report. On the side note, the jobs report might have a little angst there because you want to see weak jobs for the Fed to cut rates, because that was the Powell's rationale behind cutting rates, is weak job market, right? Inflation kind of offset the inflation story. We're hitting lows here on some of the names. All right. But anyway, so that was it. And then I'm watching in the morning and I'm like, are we going to reverse? Are we going to reverse? And I get those Broadcom puts. And you would make the case, if you were looking at the trade, you say, what the heck is JB thinking? That is a crazy. Who gets the puts? Nvidia soaring. Everything looks phenomenal. But to me, I'm looking at names like Reddit and Oracle and AMD. They're all kind of like not up as much as I thought they would be on a day like in the morning. But then Broadcom goes from 370 all the way up to 375, and I'm like, I gotta cut some slack here. There were still some premiums in the puts. I close them out, and then the rest is history. 15 minutes later, things start to accelerate. Oh well, sell off a little bit. And SPY's at 673. I'm like, if I'm not missing this, I'm prepared for it. Let me start looking for puts. That's what I started to do, and I'm looking at some names, and Oracle, which just to start a week, I'm like, this can go 240, 250, but you got to be open to both sides of the trade here. And I'm like, if there's weakness again, it was 210 to start a week. I got those 212.50s. And then I'm looking at other names, and I'm like, AMD might sell off just because NVIDIA's earnings, right? Because they're competitors. And some could say, I always used to say AMD is like the stepbrother or stepsister, the forgotten stepchild of NVIDIA. So I went and got those 212.50s. And then I'm looking for other ones. And ASML is another name that has paid handsomely the last 2 weeks on the put side. I go get those 980s. And then the rest is history. And just, there was no news, no catalyst, no headline. 675 on the SPY, almost 676 at 10:30. And then we just melted. It's like someone hit a button. And even right now, you could say, what was the catalyst? Who knows the catalyst? And you read the head, someone said it was a concerted selling spree, whatever. Like it was a, whatever it was. It's so, it's just remarkable. And then here it is in the afternoon, locked a lot of those positions in 500, 800, 1,000%. Just another great day on the heels of last week and the week before in the SanDisk. And you know what's disappointing? I would say disappointing, but look at SanDisk, right? I've been trading those 200 puts the other day, 2 days ago, and then I got the 197.50s yesterday. Uh, what it was, $10 now. It's down to 193. Those are $15. You know, so it's good if you didn't have an open mind and just keep looking to buy the dip. You get destroyed on days like days today. So on the flip side, I was actually looking. I was looking at the Serve January calls. I was looking at Lemonade. Lemonade looked great this morning. I thought, okay, do I start looking at 100 strikes? And those both went red to green. So the good is I'll have opportunities to get those on the cheap at some point in the coming days. The bad here is I put on a watch list. Like if we sell off here today, it's like NVIDIA. This was kind of like the stage for the, I don't know if I would say the rest of the year, but into the Fed, because there's not much in way of catalysts. And the AI bubble has been one of those big themes that people have been talking about. If the market can't hold up, you have to say maybe this is the start of something, right? So don't want to. I'm not going to sit there. I'm going to sit on my hands for the rest of the afternoon unless something gets crazy where I can lock some more. I mean, ASML, they're probably $20 on my puts right now. Um, but it does make sense. My ideal scenario here for tomorrow would be maybe flat or gap down tomorrow. I lock the rest of my puts in and then I play calls and hopefully make 1,000, 2,000% on the call side. The hard part about doing these trades is the hold, right? I mean, who in their right mind holds a position up 100%, and then as the position gets larger, who holds it up 500%, 1,000%? So 15 years ago when I first started doing the option trading, I used to hold, and you know, when you lock in on the way up, it halves your gains, right? So 1,000% gains, really 500% if you lock in freebies. So it takes away those multiples, but still it helps control the risk. Number one, and helps your emotions because you have to be insane sometimes to hold some of these to the promised land. So we'll see what happens today. I mean, into tomorrow. I said 635 on the SPY if 658 didn't hold, so that's an area to watch. I hate to see it get there, but then you put in a whole context of what's gone on over the last couple of months. I mean, that's September levels, right? So you hate to see the market erase 2.5 months of gains, but that's just what happens. UPB said it before. Why is the market selling off today? It's like the market's just went straight up since April 8th, pretty much. So to think that we're not going to have some pull at some point, it's going to happen, right? The thing is, you want it to happen where it's not an abrupt 5 to 10% monster crash in a matter of a couple of days, right? You want to see it somewhat orderly. So maybe we're getting that right now. And then maybe there's opportunities here to get some calls for later dated stuff. But that's it. I'm trying to think of some of the other things. The frustrating thing here is Adobe. It's like a snail today. It's down 1.5%, but you would think, I'm like, of all the puts I got, that was the one I was more convicted on. And here it is struggling to get under 310. Still at 52-week lows. Hopefully that has follow through tomorrow. Yeah, I'm trying to think of some of the other names here. It's funny. I was looking at some put plays in the morning, and I was following Broadcom, and the 245s were 50 cents. Then they were 35. Then they were, and then it bounced. And that's why I went and got those 350s. I was looking at NVIDIA puts, and the 182.50s are 25 cents or so. I don't even want to see what they are right now. That's $180. But it's like days like today, we're only down 1 point. Well, now we're down 1.4% on the SPY, but it feels like we're down 3-4% because of the big reversal. So. All right, that's it, folks. Let's have a great day. Hopefully tomorrow is another opportunity, right? I mean, that's all you can ask for is opportunities in the market, and hopefully find some more tomorrow, and then use some of the cash to start looking to get some strikes into 2026, right? Because unless you think this is the start of some bubble, gigantic bubble burst in like 2000, I don't think it is, right? If you've traded long enough over the years, there's sectors that undergo all these different little swings and changes. I mean, I can go on for a list of all these bubbles and sectors. Well, I would say sectors that have bubbles. I always talk about the dry shipping sector. If you remember, maybe it was back in 2007, 2008, but dry ships, the whole shipping sector went bonkers. And that was a whole bubble, right? And that burst in. A lot of them went from $200 stocks to penny stocks. Then you had fertilizer stocks. Like all these sectors have went on these epic squeezes over the years because of macro stuff, right? Obviously, AI is a lot larger addressable market, a bigger opportunity. But and I'm not saying it's going away. I don't, obviously, but who remembers the metaverse, right? I mean, the web 3.0. I mean, there's all these different ones that you can put your finger on. This one's a little different here. That's what I mean. And not only that, all these companies are a lot of what's going on is profits and cash. It's not just all levered to the gills on debt, right? So, anyways, have a great day. I'll be back on audio later. Rock and roll.